Today we're here with Matt Blair, COO of REI Capital Growth. Matt, why don't you tell us what you're doing? You have a new type of investment that sounds pretty interesting.
Yeah, so REI Capital Growth is our flagship product. It is a commercial real estate fund that is available to everybody, all small balance investors. You don't need to be a high net worth individual to participate, and it's focused entirely on growth. We developed this product because we don't believe there's a commercial real estate product entirely focused on growth available to small balance investors. So, we set out many years ago to build this product, and we just got qualified with the SEC. So now we are officially accepting investors.
Ah, so there's a lot of, it seems to me, I'm not a sophisticated investor by any means. It seems to me that there's a lot of companies offering investments in real estate. What makes yours so different? Just growth?
Well, so there's a couple of different food groups within commercial real estate. One of the big ones are REITs, and REITs are primarily focused on delivering income to investors. And now, the issue with that, from my perspective, is when you receive income from a real estate investment, you are now being taxed at your regular income tax rate. So, the way our fund works is we keep all of that income in the fund and we reinvest it into more assets. So, that does a couple of different things. Number one, it's incredibly tax efficient because owning real estate delivers tremendous tax benefits to the owner, and the owner would be the fund. So we will defer a large amount of the tax liability of the fund into the future. That means we can reinvest more capital today, so your returns grow at a faster rate. In addition, as an investor, because you are not receiving income, now when you liquidate your shares, all of your returns are earned as capital gains. So all of the growth is earned is taxed at the capital gains rate, which means that you're paying a lower tax rate on all of that growth.
And you primarily invest in commercial real estate.
Right, exactly.
So let me just ask you, there's a lot of people who are apprehensive about real estate. Y- but you say it's not only a good way, but perhaps a better way to invest.
Yeah, well, I don't want anybody to put 100% of their portfolio allocated into our investment. Common wisdom says that you should have investments well diversified over a number of different asset classes. So stocks, bonds, and commodities or hard assets like real estate. But the problem is that the publicly available real estate investments, they don't deliver all of the benefits of direct ownership. They deliver some of them, like the cash flow, in a REIT investment, but you don't get all the tax benefits. You don't get all the growth. You don't get all the value appreciation. You can't take advantage of a 1031 exchange. You can't lever up your position the way you can if you own real estate that grows in value. So there's all these additional benefits that make real estate a truly amazing asset class, and small balance investors don't get access to that. So we tried to build a fund that delivers as many of those benefits as possible directly to small balance investors, at a much lower investment amount than traditional real estate investments.
So I guess the one question I have is that I hear a lot with commercial real estate that there's empty buildings, that people aren't going back to offices. I don't know how true that is or not, but
Yep.
what's the risk in commercial real estate? I mean, there's got to be some risk. There's risk in everything.
Oh, there's always risk, but commercial real estate has many different asset classes, and each asset class is subject to different market pressures. So office is in a particularly difficult position. Class A office is doing very well. Class B, Class C office is really struggling. Bringing people back to the office has been very difficult for companies, especially that high-speed internet is available almost ubiquitously across the country. So office in and of itself is in a really difficult spot. We are not investing in office. What we invest in are open air, multi tenant retail centers that are grocery anchored. That means your grocery store with all of the shops in the same shopping plaza as the grocery store. Now, the beautiful thing about this asset class, in our opinion, is number one, they're everywhere. In almost every town, municipality across the country, there's tens and tens of thousands of these centers. And they're particularly strong because it's really the life force of the community. People go to the grocery store, they go and get their nails done, they go and get their hair cut, they go to get a new phone, they go to get their dog groomed. I mean, they go to the restaurants, the coffee shops. I mean, there's so many things that people still like to go and do, and those centers are everywhere. We also invest under $40 million. We don't buy properties over $40 million because there's a lot less competition. We are primarily competing with high net worth individuals that are looking to buy these assets for themselves. Most institutions are looking for $50 million properties and up. So we think that there's a really great gap within the market where we can buy centers that are very great income producing properties. They're very stable. These assets are, when you lose a tenant, it's usually very easy to replace a tenant. Um, and then because these centers are all over the country, we can diversify the portfolio of assets in a number of different ways across labor market, across tenant fee, the lease expiration. So we can do a lot to reduce the risk on a portfolio basis. And then this particular asset class at this time, we think there's a tremendous opportunity to accumulate a large number of these centers that will diversify away risk and create a really tremendous foundation for a long-term investment portfolio.
Does REI have a lot of experience in this type of, acquisition? You know, these
Yes, yes. Our founding team has a variety of different um, experience levels, and we all bring a different piece to the puzzle. But our CEO has been investing in this exact asset class for the past 15 years, and he's put together a portfolio of, I believe it's 32, maybe a little bit more than that, $1 million of these assets over the past 15 years with just family and friends. I'm personally invested in assets like this. And then our CFO brings a huge amount of experience on the accounting side. He knows, commercial real estate accounting, he knows GAAP accounting, and he was an audit partner with KPMG for a long time. So we think that we bring together a really great team that knows all the different facets of the business. And then we have direct experience in this asset class with our CEO.
so I guess, one other thing about real estate that I would be curious about is you mentioned that if a tenant leaves, you can easily replace them in these type of, establishments and acquisitions. What makes a good tenant in your mind for if I'm an investor, how do you look at tenants? What makes someone a good tenant?
A lot of people will lean towards the idea of you want a large national credit rated tenant. Uh, you want a Starbucks, right? You want an Apple. You want these huge mega conglomerates, right? But you also have to think about the functionality of the center, right? If you have a Verizon store, you don't necessarily want an AT&T. If you already have a coffee shop, you're not going to add another coffee shop. So it's about giving a good variety of um, storefronts for your consumers because, consumer interest in these stores is very important. So it's not always about throwing an Apple store into your center, which completely changes the entire environment for these types of stores. So you really want to look at each asset on an asset by asset basis and see what this community needs. And, realistically, sometimes tenants don't work out. Sometimes they're only there for 3 or 4 years and then you have to find a new tenant. Um, but you're looking for larger brands that have good balance sheets, that have the ability to basically guarantee their payments for the length of the lease. And you're looking for a good mix between all of your tenants.
So you're saying and this creates a stable investment by
Yeah.
having these type of things. So, but why not, as an investor, why shouldn't I put my money just in the stock market and save for stocks, let it sit there? Why not do that?
Yeah. Well, I think you should invest in stocks. I think everybody should invest in the stock market. But what you get with the stock market is a tremendous amount of volatility, and you earn a good return for subjecting yourself to that volatility. Now, the key with the stock market is putting the money in the stock market and not panic selling when the market starts to go down, which a huge percentage of the people do. I do it myself, right? And now I'm waiting for the market to crash so I can dive back in. But that's not really how the market works. That's not how you're successful in the market. And that psychological component makes it very difficult for people to accumulate a large amount of wealth within the stock market. I mean, don't get me wrong. Some people accumulate a huge amount of wealth because they are very disciplined and they don't panic and they don't sell. But there's also a ton of people that they come to, retirement where they are required to start liquidating parts of their portfolio and the market drops 30 or 40%. And now they're liquidating a larger percentage of their nest egg because the total value has gone down tremendously. So what we're trying to do is we're trying to create a tremendously stable investment that grows very consistently over long periods of time and is not subject to the volatility of those markets. Now, you earn a slightly lower return for that trade-off, right? It's less volatile, it's less liquid because you can't sell it any day you want, and you earn a slightly lower return for that trade-off.
You One of the things that you had mentioned previously, was that it's for a small investor can take advantage of doing something like this, just like a big investor can sort of get the advantages of a big investor through your system. Is that the case?
Correct. Yeah.
How does that work? Why is that?
So, one of the key benefits that large investors get the benefit of if they go out and buy a piece of commercial real estate on their own is they get all the tax benefits of that ownership. Now, there's some nuance there, and I'm sure there are some accountants that are going to, you know, want to point out all of the details. But if you do it right, you pay a very, very small amount of tax on the income that those commercial real estate properties generate. And in doing that, you have the ability to reinvest that capital at a higher rate because now you're not paying Uncle Sam his annual tax payment. So you have more money to reinvest. And if you defer that tax liability into the future, your money can grow faster. So wealthy people have taken advantage of this for long periods of time, but small balance investors don't get that tax benefit. And realistically, small balance investors don't really optimize for taxes because it's not their biggest priority in the world, right? Because they have other issues. They have to, make rent, they have to, feed their kids, they have to put their kid in daycare. Whatever their expense issues are, they're not worried about tax efficiency. So what we've done is we've built a product where you invest in commercial real estate. We deliver all of those tax benefits to the small balance investor through the structure of our fund. And that means their investment will grow faster. And when they ultimately need the money and they decide to liquidate their shares, they'll have more of it when they need it.
So how liquid is my money? Is it if I invest, how liquid w how as an investor, how liquid is my money? I guess is the basic question.
Right. So traditional private real estate investments, and this is a private real estate investment, they have holding periods of anywhere from 5 to 10 years where you can't liquidate until the entire investment is liquidated and everybody is liquidated simultaneously. Our investment opens up a liquidity period roughly on an annual basis where we allow people to sell their shares back to our fund and we buy them back at the current value per share. So you can accumulate growth for several years and then sell your shares back to us at that full value. The only problem is you have to wait until we open up a redemption period, which we plan to do every 12 months. Now, the reason it's once a year is because with our SEC registration status, we can't buy back shares while we're raising new capital. So we plan to continuously raise new capital every year, but we have to shut down the capital raise to open up the redemption period to allow people to sell their shares back to the fund.
Got it.
And now because we're buying properties that are producing cash flow day one and reinvesting it into more properties that produce more cash flow, the fund is going to have tons and tons of cash flow. So there's plenty of money to go around to buy shares back from individuals. And also because we're attracting a large number of small balance investors, everybody's investment horizon is different. So we're not going to have a, 20 or 30% of the fund looking to liquidate in the same year because people want to keep their investment. Not everybody wants to sell at the same time. So that distributes the redemption requests over a normal distribution. And now there shouldn't be any individual year where we are oversubscribed on redemptions.
One thing that I found interesting is that, and correct me if I'm wrong, but you seem to combine the investment with the bank. So you raise money and act as the bank, and you also act, and you also have the investment. Is that the case?
We raise the capital and then we invest it and we manage the investments. So in terms of a bank, right, I always think of a bank as lending money. But commercial investment banks, they raise capital. So they certainly do. So we serve those two functions. We raise the capital and we invest it. I suppose three functions: raise it, invest it, and then manage those investments into the future. But through our qualification status with the SEC, they allow us to raise capital from the public, from everyday investors, everyday people who aren't necessarily sophisticated investors, because we had to go through a pretty lengthy qualification process with the SEC. We had to file audited financials. We went through many Q&A sessions with the SEC to make sure that they understood what we're doing and that they feel comfortable that our offering meets their necessary standards to accept capital from small balance investors. So, it's difficult to be able to open up these investments to everyday people, but that's a major goal for us, was to be able to democratize, commercial real estate investing.
Can you just, if you could just go a little bit on that when you say, I know I've saw in some of your literature, you've used that kind of democratizing investment. Um, Again, sort of making it for the little guy. Can you just explain that a little bit, that democratization of investing?
Yeah. So I look at democratization in general as opening up access to something that otherwise has been inaccessible, right? Just as a rough conceptual idea.
Mhm.
Well, really high net worth individuals, they buy commercial real estate for kind of three reasons. They buy it to protect their wealth, they buy it to grow their wealth, and they buy it to pass on their wealth to the next generation, right? And there's certain legal structures around commercial real estate investing and ownership that allow them to do that very well. Now, small balance investors don't have the ability to do that same type of investing, mainly because commercial real estate properties are very expensive, right? The smallest probably commercial real estate property that you'll see is around roughly $1 million. That's a big chunk of change. Even if you use debt and leverage your investment, you still have to come up with two, three, $400,000 on a single property. And now that property might only have one tenant. So now if you lose your tenant, now there's a huge amount of risk. There's a lot of concentration risk around this one asset. So commercial real estate as an asset class has so many benefits And if you know what you're doing and you know how to invest and you can invest at the right scale and you can diversify across multiple properties, you're bringing down the risk profile tremendously and you're delivering huge amounts of benefits to people that have never been able to create these benefits on their own just because they're priced out of the market.
So I guess traditionally a lot of that's been done by very high wealth individuals who get together and sort of buy properties and things and take advantage of it. So now you offer it to somebody like me who's not high wealth and who can sort of join in on that type of investment and gain all the benefits as a high wealth investor would do.
Yeah, well, our fund is pooling capital from many small balance investors. So if a couple of high net worth investors get together and buy a couple of properties and manage them as a group, that's roughly the same idea of what we're doing. We're just doing it with several thousand of our best friends. So it's a little different in the sense that, you know, we're bringing together a lot more people, which is, that's a complexity that we have to deal with on our end. But we think that that's really worth the effort because our core belief is that commercial real estate can change your financial future, right? It can make a huge impact on somebody's retirement, on the way that people think about money, the way that they teach their kids about money. We think it has the ability to change generational wealth and generational investment understanding in a way that not many asset classes do. And there are there are billions of people on this planet that will never be able to accumulate enough capital to buy a property on their own. And some percentage of the people that do are going to lose all that money because they don't know exactly what they're doing and they buy the wrong property at the wrong time. And you don't hear those stories very much, but they are out there. And so we're trying to create a place where we're reducing the risk as much as possible and opening up as many of the benefits as possible. And I don't think I said it before, but the minimum investment is $500.
Wow,
And
that's not very much.
yeah, and
Yeah,
that can be a lot for some people in this country. I mean, there are plenty of people in this country that can't put their hands on $500, but it's at least attainable. If the minimum investment was 25,000, there'd be 80 or 90% of the country that just says, well, I'm never going to be able to put
sure.
$25,000 away to do this. But
Yeah.
$500 is at least, it's a benchmark that I would say 75% of the country could definitely hit.
Now, I guess the last question is that why should I trust you? Why should I trust your company? There's a lot of companies out there that do a lot of things, a lot of companies that say we're the place to go. Why trust your vision and your system? Why trust you, I guess, is the and your team.
I mean, all I can say is that I built this product because this is how I would want to invest. Um, I truly believe in it. I've put a huge amount of my own personal capital bringing this to market. I work on this with my father. We believe that this is going to be a generational company. Um, One of the things that we have not done is we have not raised institutional capital because we believe institutional capital puts certain capital pressures on the management team to make poor decisions on behalf of their investors. Well, we're building a very slow, very deliberate, very disciplined investment value creation vehicle. And having those pressures would cause us to potentially make poor decisions on behalf of our investors. And so what we're doing is we're trying to do this organically. We're trying to bring people together to invest as a community. We offer several free resources on our website for people that do want to go out and do it on their own. We give you as much information as we can to make you as successful as possible. Um, so we're trying to prove our trustworthiness with the free information we give away. We're trying to get in front of the camera and show people that we have true conviction that this is a great product. And we're, we're putting our family name behind it because we plan to own this company for the next 20 or 30 years because that reinvestment strategy provides very, very solid returns over 5 to 10 years. But if you hold this investment for 20 years or 30 years, the compounding effect just explodes. So my mind is on those investors that want to invest for 20 or 30 years. And I'm saying that I will be at the helm for the next 20 or 30 years to make that a reality. And so if people listen to this and they think that that's not trustworthy, then like, okay, I understand. But the best I can do is say I'm going to be here and I believe in the mission and I believe in the product.
So how would someone find out more information? Where would they go?
So you can go to reicapitalgrowth.com. That has all of the information about our offering. It has all of the information about our business plan, the asset classes we're going to try to invest in. And then there's a link to our investor portal on that website. So you just you go onto our investor portal, you can create a free account. That's where all of the educational resources are for people who are looking to go out and invest directly on their own. And then you can invest directly through that portal. So it's a one-stop shop. We built it completely on our own. It's completely custom. That was quite the endeavor, but we felt like that was important as well, to be able to control the entire technology stack, so that we can deliver again the best product that we can to our investors. So all of that is available on the website. So go on over reicapitalgrowth.com and yeah, we can get started today.
Great. reicapitalgrowth.com. Okay. Well, Matt, thank you very much. Thanks for being with us today. And sounds like a fascinating investor opportunity. Thank you.
Yeah, well, thanks, Steve. I appreciate you having me.